Good afternoon and welcome to the WSBA Crypto Roundup. I'm David Brill, joined as always by Ashley Klayman and Ron Quaranta. It's a big week. The Fed just made its most consequential signal of the year. Bitcoin is sliding in response. Tokenized stocks are moving from the SpaceX debut to the next phase of Wall Street infrastructure. And STRC, Strategy's preferred stock, is in free fall, generating real questions about how the instrument was designed and marketed. A lot to unpack. Let's get into it, Ron.
David, Josh, it's good to see you both. For everyone in the audience, thank you so much, David, and thank you for the introduction. Josh, by the way, did you notice when David said Bitcoin price, I had this Pavlovian response and looked at the terminal to my right? For everyone joining us, thank you all so much. Our usual disclaimer is obviously, please keep in mind, nothing we're discussing is any sort of investment or legal advice. And really what we're talking about are our own personal opinions, not necessarily the opinions of our respective organizations. David, you threw a lot at us. You want to kick it off?
Sure. I think we have to talk about Bitcoin and the Fed first.
Yeah.
And a lot of people said it was a hawkish surprise, and the markets responded that way. Mm-hmm. But, it was one of these things where the Fed didn't raise rates this week, but it might as well have. Even though the chair kept the rate at 3.5% to 3.75%, 9 Fed officials projected at least one hike before year end, and forward guidance was stripped from the statement, and Bitcoin kind of fell off a cliff. We're trading around 63K right now, down about 2.5–3% last 24 hours. But I think the biggest thing is that rate cuts seem to be off the table for 2026, and that's something I think people were looking forward to, in the community as far as cheaper rates and more liquidity. I'm still of the view that I think we may get one rate cut right before midterms, but what do you think, Ron?
All right, there's a lot there, so everyone strap in. So David, a couple of things on the Fed changes, and politics aside, with thank you, seatbelts, Josh, with Kevin Warsh taking on the role of Fed chair, I think a couple of important things are happening, David. One is we're looking at some structural changes related to the Fed. You sort of referenced it. Absolutely, the forward guidance was taken away. Let's be candid. For the years that we've had forward guidance from the Fed, which started when I think Alan Greenspan was the Fed chair, markets began to only look at the forward guidance and not the data, and began to react to that forward guidance, which to people as old as you and I, David, not necessarily Josh, that was always a mistake, to look at just the words of the forward guidance, not the underlying data or the forward data. The other interesting thing that the Fed chair did, and I'm going geeky, Josh, please forgive me.
Oh, no, I like it. I actually have some questions, so keep going.
The Fed had this thing, David, called the dot plot, which was just this horrific sense of, let's anonymously get Fed governors to essentially take a pencil and put a pencil point in, or pick a data point where they think rates and certain data will be in the coming 3, 6, 12 months, for example. For the first time that I recall, the Fed chair, Kevin Warsh now, refused or declined to submit a dot plot. That's a signal, David. That's a way of saying, we've got one mission as the Fed, stable prices is our target, giving the market data that says, let's guess what the Fed's going to do. And will they use the word transitory this time? This is really his way of saying, it's things are going to change, and it's going to get back to a more normal process within the Fed. David, last thing there. I'm with you on the price cut. I think people are overestimating the rate hike. I agree with Citi. I think we're going to end up with at least 2 rate cuts before the year's out. And whatever happens in the Middle East is part of that equation.
So may I just ask some questions?
Please.
For a moment. So I hear what you're saying, that the market was surprised, right? And that affected the price of Bitcoin, et cetera. However, on our last session, I distinctly recall you guys talking about the surprising numbers. And so I feel, but maybe I'm wrong, it doesn't seem to me that this is such a surprise from your perspective. But let me know if I'm wrong and if your crystal balls did not see this coming. Because from my recollection, of some of the numbers that we discussed in the last session, it seemed like you guys were already foreseeing that this, could be a result.
Did she just call us
Am I wrong?
Nostradamuses, David?
You kind of did.
I mean, I think this wasn't a surprise. What I would have loved is if Kevin Warsh came out and the Fed came out and said, you know what, looking at the totality of the circumstances of what's going on in the world, we think 3% a year should be the baseline.
Yeah.
That's what I really would have liked to hear. I think that's aspirational and right in this year in particular, it'd be hard to say for some people, but I just don't think 2% is feasible anymore.
Yeah.
And, I just think the conflict in Iran has just caused pressure on consumers, especially, gas and energy costs. And those costs have just been filtering into all the other products that people are buying, or the majority of them. And ideally, once that dissipates, we might have the environment for rate cuts.
Yeah. I just lost.
What about you, Ron? What do you think?
Yeah, I look, Josh, I appreciate the kind words, and as you know, I've retired my crystal ball in favor of David's.
Yeah, but you got the screens everywhere. I feel like that's
a frightening number of screens at this point. When we look at that data and what David's talking about, structurally, the Fed and so many economists have held to this false narrative that this number 2% is that David, that terminal rate. I have not heard anyone explain to me the underlying logic behind that terminal rate. And and it might be there. I'm someone in the audience, please tell me they've seen it and they heard Chair Powell describe it in detail. Without that data, you keep telling the market, we're looking for 2%, but we're not there. We're looking for 2%, but we're not there. It begins to impact decisions for capital allocators in the United States, David. If you get off of this, we've got to get to 2%, and if we're not getting to 2%, we're failing, you begin to give firms and people and investors the opportunity to say, maybe 3% is the norm. Economy looks good. Jobs might be a little bit of a challenge, but there's real revenue here, there's real innovation here. And it changes the dynamic of how money moves in this country. We've been living under this regime of, if interest rates don't get to this point, things are going to be bad. And I don't think it's that simple.
Yeah.
So I have another question for you guys. And please feel free to exit stage left with the questions.
We would.
But so if the market had priced in a cut, right? And there isn't one, and there's a prospect of potentially none, holding aside what you guys have said about midterms or potentially 2 by the end of the year, depending. I'm going to remember this, jotting it down. But why, in your view, did this have an effect on the price of Bitcoin? I can understand why other markets might move if they'd priced in certain rates, but why Bitcoin?
I mean, David, I've got opinions that may or may not be right, but David, you want to?
No, Ron, jump in. Go ahead.
Yeah. So look, Josh, you and I and David and so many of our colleagues in this space have been talking about Bitcoin, which is by far the largest largest crypto out there by market cap. What its function was supposed to be, right? We talked about it as a store of value. We've talked about it as a medium of exchange. And then we heard it's an inflation hedge, and then we heard it's correlated to equities, then we heard it's not correlated to equities. In my mind at this point, and I think shout out to 10x Research, I think they might have commented on this, forgive me if I'm screwing it up. It really is a liquidity hedge. And what I mean by that is when money's tight, Bitcoin goes down. When money's loose, Bitcoin goes up, simply because people are able to allocate more money to Bitcoin as a hedge or an investment when there's more cheap money around. In the absence of that cheap money, people have to make those decisions we talked about, which is, I might not be able to take this risky asset. I might not be able to buy Ron coin, for example, but I might invest in gold, for example. I might buy the Mag 7. I might buy AI stocks. It really comes down to, where do you rotate when things are changing? And David, correct me.
No, I agree. I mean, Bitcoin was supposed to be, it's actually ironic. because Bitcoin was supposed to be the macro hedge, and the geopolitical ceasefire gave it a bounce last week, but now the Fed, in their statement took it all back.
Yeah.
So look, I think, Josh, in the totality, if there are issues where people are concerned about liquidity, if there are issues, with uncertainty, risk assets are still the first ones that get sold off, and Bitcoin is still in the risk asset camp.
So as we see in the news, or at least as I recall seeing in the news, where the strait is open, the strait is closed again, is this, in your view, until this stabilizes, we're going to see continued volatility or continued pressure on the price of Bitcoin? Not investment advice.
I mean, I think until some of that sorts out, and it is a messy ball of ugly, no matter what your political stripe and no matter how you look at it, it just kicks off the series of uncertainties across all global markets, and it's the skew that we've talked about. Like, David, you and I were talking about this a few weeks ago. If oil is down or bonds are down, pick a thing, whatever move Bitcoin has, it skews more in that direction. So if markets are down, S&P's down 1%, Bitcoin will be down 4%, for example. So that skew, it matters, Josh. So I think long answer is yes. Depending on the outcome of those macro issues, Bitcoin will respond.
And did we see the same in altcoins?
That's David's.
I was saying to Ron that the trading in semiconductors and chip stocks reminds me of like what altcoins used to be like, big moves on a daily basis, except those now have real earnings and growing earnings and legitimate PEs. And altcoins, we still have the same sort of issue of like what revenue are being generated for the token holders. But I will say this, I do think that a couple of them, and again, we're not giving investment advice, but Hype just continues to have so much volume on their platform and their price reflects that. And some of the AI tokens have done well or held their own because there's revenue attached to them, or you can see their usage within the overall AI. But in general, again, we still have this problem where we have token projects, there's a lot more utility, but there's, what tangible value is coming to token holders. So
David, Josh, can I weigh in on one thing there?
100%.
David, we joke about alts, or at least we say, I've joked about, David, where are your alts? But you had said something really wise in my mind several years ago, which was when you look at the alts, some are not going to be worth it long term, but there are use cases in there that will ultimately be very, very valuable.
Yeah.
My thesis, and I'd love one of you to tell me if you disagree, is that, as my voice cracks, if you disagree, is that the alts with the good use cases are subsumed by the noise of everything else in the market. Macro, Bitcoin, stretch, geopolitical, why doesn't the interest rate get cut? All of the noise out there is delaying the use cases that might be useful for some of the alts.
So I don't know that they're delaying the use case, but they're delaying the perceived value of the use case and therefore affecting the price of the token.
Yeah.
I just think we have a liquidity issue right now, and that there's just not a lot of money floating around on altcoins, and it's unfortunate. I think there are a lot of good projects. I mean, look, there are a lot of projects that are going to go to zero.
Yeah.
It's going to be like NASDAQ, in 2000s, but they're going to be, maybe 5% of them are going to be good, add value, and they're going to have real value to them. I mean, look, there's some tokens, I don't want to start calling them out. They're trading under $10. They are trading at numbers that were similar to what they were like 5 years ago, but the platforms themselves have grown exponentially.
Thank you.
So, we really have an issue where there's not a lot of liquidity in alts, and until I think Bitcoin and Ether kind of recover, besides one or two stabilized alts, I think it's just hard for people to get excited about them.
Josh, can I point out one thing? David has said the word alts in his life so long that now when he says alts, Amber looks up. David, thank you. I appreciate the thesis.
Amber's still waiting for like the fancy, for my daughter to get a fancy dog purse from the alts. So hopefully one day that'll happen.
So I have a question for you guys, and this is going to reveal my ignorance about something. Okay. Not that that's anything new. But you know how on, say, NASDAQ or something like that, there's a floor for what a price can be. Otherwise, you have like a delisting notice, and then sometimes people do like a, reverse split or something like that to get the price up. Do we have that concept on the centralized exchanges, or on? I imagine we don't have it on DEXs, but like, do we have that concept that if something falls beneath a certain value, that it's? I know we have delisting procedures, but like, is it ever based on that? And I'm just wondering, if we don't have that, might there be some utility to having something like that in terms of maybe clearing off some of the alts that are not going to work out, and maybe allowing that capital to be deployed to other projects? Just curious. I'm not trying to push this narrative, by the way, anyone, and maybe this already exists and I'm just not close enough to it, but would love your thoughts.
I mean, David, you've been, and it's a really good question, Josh. I mean, David, you've done some of that exchange work. I know that exchanges have their listing criteria by which they will list a particular token, and I've got to assume the other side of that is, here's, outside of sanction or legal or regulatory issues, here's why we would delist. I'm imagining liquidity, I'm imagining volume, but David, you probably know that better than I do.
I mean, the problem is a lot of tokens, there were so many put into circulation.
Yeah,
so
exactly.
They can be like a functioning project, but their price, isn't, doesn't necessarily reflect that in terms that it's like multiple dollars. It's just they're functioning projects and they trade under $1. I mean, a couple of Ron's favorite tokens, the whole meme coin ecosystem, many of them trade at like thousands or further, fractions of a Satoshi. So I don't see that sort of being the threshold, but I do think that amount of volume could be a threshold where like things start getting delisted. But price is hard because of, some of the way the projects, list all their tokens.
I will take the offensive comments about Shiba in hand. I'm not recommending Shiba, please, anyone who's watching. I mean, but David, to that point, where liquidity really dries up and both sides of the order book are very, very wide, you can also look at kind of manipulative trades that you don't want happening on a centralized exchange, for example.
Yeah, and also I just was looking at Doge, and Doge is like about, the equivalent of 8 cents, but it also has a market network value of 14 billion. So
I haven't said the word Doge in a long time, so thank you for bringing that back up. That chestnut.
Sure.
By the way, has it still been correlating with Bitcoin?
It's a good question. I honestly haven't kept on top of it, but look, and I'm not the first person to say this, but I think a lot of these tokens, I'm not talking about Doge in particular, but a lot of these tokens can have these multi-billion-dollar network values. Like at some point that has to change so that the real the projects that really have a lot of use case and utility and they're used on a regular basis, like they just can't be 5x of a project that has a lot of utility and network value.
I also learned I have to detrain myself every time Josh says, is Doge pegged to something? I almost went typing on this terminal. I've got to stop.
Yeah, and look, and again, I'm not, I'll just take one for example. If we had that dollar threshold, XRP's down to $1.14.
Right.
Would they get a delisting notice from an exchange at $1 if we had this threshold? And they're around 70 billion right now. So
yeah, I mean, I wasn't, how did I say this? I know it's $1 for like NASDAQ. That's my recollection. I wasn't suggesting that it should be $1 for, for digital assets for the reasons you're mentioning. I'm just wondering whether, like, is there a way, and maybe it's volume trades or something like that is meaningful, but something that at certain points someone can say like, okay,
yeah,
this is maybe this project is not doing anything anymore.
But that raises, I'm sorry, David, go ahead.
No, the last thing I was going to mention, I was just looking at some tokens, and I think one data point that might be really useful to listeners is that when FTX failed, there's a lot of locked Solana that was sold. And it was sold in some in the 60s, some in the 70s, 80s, and 90s. And right now, Solana's down to 69.50. So the willingness for people to put money into some of the tokens, and Solana's a good project, I think we're just seeing a lack of liquidity, and we need something to jumpstart that to really get. We've never had an alt season again. Like, everybody's been waiting for it, and it hasn't come. So, will it come? And what do we need to see to have it come?
Listen, when Shiba comes back, we do the roundup on that yacht I've been talking about. But Josh, can I ask a question back to you and David, because I think it's a really interesting point to raise.
Yeah.
And I know they are out there, and I'm not familiar enough with them. When we talk about things like delisting, when we talk about where some of these tokens are going, it makes me wonder why crypto ratings are not a bigger part of the conversation. Like, David, we've got the rating agencies, and we can have long conversations about the veracity of some ratings agencies, but you'd think that'd be a bigger part of the day-to-day conversation for crypto.
Well, you're starting to see some banks like Standard Chartered wrote a couple of, reports on a couple of projects. Uniswap, they wrote a report on, and there's another one that just escapes me right now. So I think you're starting to see some of that. So I think that could be the wave of the future, but I think, these rating agencies only do these things because they have paying customers who are paying for that. So maybe after Clarity gets approved, staying very positive on that, more of those kind of products will come to.
I mean, just echoing David before I even touch what that smile was about, Ron, with Clarity. So I agree with David that, this thing, I think ratings will come in the future, potentially more, but for the same reasons that David mentioned. What I would also note is, just looking back, and maybe one of the reasons why we haven't had those in the same way apply to digital assets is that for such a long time, we were focused on the regulatory treatment. Like, is it a security? Is the SEC going to enforce? Is this a problem? Is this, and I think that would have been very difficult. I mean, we were doing ratings a lot of times, but the rating was on the likelihood that something was a security.
Right.
Good
point. David, Josh, we talked about Bitcoin. I've got to raise this. And again, I think it's 10x research. Guys, if you're out there and watching and I'm misciting, my apologies, but there was this really interesting structural analysis, David, about BTC that I'd love to talk about within the group here, which is that when you look at the macro impacts of BTC, on and on and on, the stuff we've already spoken about, we've already discounted the next halving, for example. And the argument in this thesis was that when you look at the halving, when you look at institutional flows, there's a clear pattern. Post-halving, you begin to see institutions accumulate, and then you see this kind of run-up, and then that run-up wears out, and then we enter, quote-unquote, a crypto winter. And the outcome of that was these prognostications, David, that after the next halving, when institutions start diving back in, we're looking at $1 million per BTC. Seems a bit of a stretch, but do you subscribe to the halving kind of schedule anymore?
It's really interesting you say that, because part of me thinks that the halving in the past was more relevant than it should be now, with all the different players involved. But part of me thinks that some of the major selling is being done by whales who may believe in the halving cycle and are continuing with the 4-year cycle. So it's kind of a mixed bag for me, Ron. I kind of feel like as it becomes more institutionalized, it can't be that predictable.
Yep.
But that being said, I think that I think a number of people are surprised that it's sold off the way it has, especially with the favorable regulatory environment. So sometimes, there's causation, there's cause and causation, and some people are looking for the causation because they see what the cause is.
Yep. So is DCA for BTC dead? Is dollar cost averaging dead, David?
I don't think it's dead, but I do think there are certain times when it's under certain technical levels that people should be buying more. Okay. And so, and that applies to stocks as well as crypto. So I think if crypto is trading under a certain level, historically there have been good returns when it's trading under that level. So I think we could think of it that way.
I mean, DCA is a very long-term perspective, because arguably, if you're dollar cost averaging into the AI stocks, your average cost keeps going up.
It's true. But look, Bitcoin is volatile. So look, also you have to remember, people don't want to, like, if you're going to invest 100,000, you don't want to put 50,000 in at one time and then hope you just timed it right. So I think for people who aren't professional traders, it's really helpful.
Yeah.
Are you going to get the highest returns from that? Maybe not, but that's why people run actively managed funds, because if everybody could just DCA and get the highest returns,
yeah,
why do we need active funds? Everybody would just DCA on the 15th of the month.
Yep.
So Josh, I'm curious, like, what did you think about tokenizing SpaceX and what happened with the trading in SpaceX? Like, is that something that was on your radar?
I mean, the prices were on my radar. So, I mean, I think you guys are probably closer to following SpaceX than I have been. So maybe if you guys can kick it off, I can add in some questions and thoughts. But I think you guys, from the text messages that I've seen, you guys are much closer to this.
So
than
I've got a bucket of Pandora's box stuff I've got to open up about SpaceX, David, but I'm going to let you go first.
Yeah, so, I think the thing that I thought was interesting was that the tokenized version of SpaceX was traded on Solana simultaneously. And so, like, the idea that we're seeing in real time some of these big offerings now be on Solana, maybe they'll be on Figure, like, we're really starting to see this come to life. And so that's really the main thing. I'm not so much concerned about, how much SpaceX went up, but more that they were, like, trading simultaneously and it seemed to work. So I think that's, like, a great thing for us moving tokenization forward.
Yeah.
That's how I've been thinking about it, Josh.
So one question I have for you guys. I mean, one thing I did think was interesting is the redemption path, right? Could go back and forth between the traditional stock and the tokenized potentially. I mean, what do you guys think of that? Rather than having it like be all one place or all another place, or having it just be a receipt, or having it,
So I've got,
one of the
yeah. So I've got I'm sorry to interrupt, Josh. I've got a couple of thoughts and a couple of thoughts. So I think it's a logical next step to have that redemption path, because at this point, we are not in a world where you can just issue all of your stock all of your equity on a Bitcoin, because it cuts out. The transfer agents are out, custodians are out, stock loan, stock borrower becomes a problem. So the redemption becomes a part of the. I'm gonna use the interbridge process between TradFi and tokenized equities. I am slightly concerned about two things there, and I think it's a good approach, but it certainly becomes an attack vector in a cybersecurity way that I think we're not talking about too much. The analogy there, Josh, is atomic swaps and cross-chain bridges.
Yeah.
Similar principle in a way. And I think the other thing there is that there is a delta between instantaneous trading and settlement on a blockchain and call it T+1 broadly, and management of transfer agents and custodians. Someone's got to own that part of it. Someone's got to be responsible for that delta. And that's not an easy sell right now for some firms.
Yeah. So I think that the tokenized securities are where stable coins were in 2020.
Yeah.
I think they're like this very like infinitesimal part of the market. But as we get more regulatory clarity and we get, DTCs going online with tokenized securities, NASDAQ has a plan for it. I just see it growing really exponentially from here. But you're right, Ron. We have the cyber issue. And then we also have like a potential double counting issue that we have to be mindful of, where, will the ledgers for the transfer agents for these companies, will they be able to match up with what might be tokenized and be trading on tokenized, platforms?
Plus, nerds like me want their proxy statements. I've got to see it. So, what are you going to do about those?
I would greatly bet that the last time you've actually read one from cover to cover.
I was like an 18-year-old nerd reading the Wall Street Journal. But I will say this, though. All joking aside, and for everyone in the audience, I'm sorry you're hearing this TMI. but I vote every proxy. Like, I am not one of those shareholders who are like, yeah, I don't care. I care.
I love that, Ron. That's great.
Well, you and the class action lawyers, I think, besides the drafters, it's you and the class.
Got into the wrong field.
Reading the S1s to see if there's, claims that you could potentially bring.
Oh my God.
But actually, in that vein, I want to pivot to strategy and STRC, because there have been a lot of rumblings about how STRC is trading. And so, Ron, I know you have some thoughts on this.
Mm-hmm.
Josh, I think one thing for you, like, obviously you've dealt with, secured transactions, you've dealt with bondholders. A lot of people think of STRC as like a bond where they're getting a coupon, but it's really not. It's a preferred equity. So, like, Ron, do you feel like that's the mistake people are making in the marketplace?
I mean, yes, I think people misperceive, despite the language that says perpetual preferred stock. Let me add one wrinkle to that, David. Yes, I think they're misperceiving it. I think they've got this implicit sort of, I'm guaranteed this payment the same way I'd be getting a coupon on a bond, and not really understanding the implications of a perpetual preferred. And let me ask this question. I don't know anyone that buys perpetual preferreds. Like, I think most people don't understand a perpetual preferred enough outside of strategy to say, I want to invest in that. So when you start investing it because it's Sailor and it's Bitcoin and it's strategy, you open yourself up to a whole new series of potential circumstances that most retail people just don't understand.
Yeah. And this is the thing where I think of you, Josh, like counseling one of your clients. Like strategy, Michael Saylor's coming out and talking about like Bitcoin credit. And it's not really Bitcoin credit. I mean, it is a preferred, and the amount, you do get a rate, but the par is not guaranteed. I really think these are more like high yield instruments. I'm thinking of them that way. But there is risk in high yield, and I think people have not fully appreciated the risk in STRC because they just assume all the Bitcoin backs it.
Is it rated as a high yield? I'm sorry to interrupt, Josh.
I don't know if it's rated as a high yield, but whenever I see double-digit coupons, I just immediately think of high yield.
Fair. Sorry, Josh. Go ahead.
Oh, I was just going to say, and I won't speak to this particular thing, right? But just in general. So without talking about STRC, right? For those at home, a perpetual preferred stock is different from a bond in some ways because there's no set maturity date, for example, right? That's why it's said to be perpetual, right? Rather than having interest paid on it, it pays a dividend. And it would, if you think about the capital stack, right, of something, you've got like, in terms of what gets paid out first, right? First you pay out debt, right? This is very basic, but you pay out debt. Last, you pay out equity, or flip it around depending on how. But I'm thinking about equity here and debt here getting paid out first. This preferred would come before the common, but after debt. So those are some ways in which it's different from a bond. And also, typically, perpetual preferred stock would tend to have more price volatility than bond, which a bond would tend to move generally towards par, right? So anyhow, just some thoughts about that.
That was a great lesson. It brought me back to the old corporate finance days, Josh.
Yeah. Well, I did a little research too, and in Strategy's prospectus, it states it has the right to unilaterally reduce the regular dividend rate, and that could cause the trading price value of STRC stock to decrease. Now, that hasn't happened. They've sold, people have gotten the dividends on time. I think every quarter that the instrument's been trading, or every month. I do think people aren't aware of that. And again, like, I'm supportive of the ecosystem. I just think that people are equating STRC with pegging with a more fundamental issue in crypto and Bitcoin. And I think people shouldn't necessarily equate it that way.
So David, Josh, let me ask this, because when you look at the news of strategy pulling the at the market part of that, not pulling it, pausing it, if it sits below par for a long enough period of time, you could imagine from a capital structure perspective, they issue more shares of equity. Could they do that to raise the money? I mean, I don't know the mechanics of strategy-specific corporate structure. And Josh, I know you've got to weigh in with something. It might be a dumb question, but I'm just curious. Or can they not go to the market anymore for that money?
I mean, I think they can still go to the market for that money. I just think that people would see through that and wonder.
Yeah, it'll cost them too. Yeah.
But look, this is also a way where the market is working, and that if you want this yield, the market is saying there's some risk to getting this yield, and you're gonna get it better. You're taking on some risk, and that's why it's not trading at par and it's trading at 88 instead of 100.
Yep. Josh, I know you've got something to raise, and I think I cut you off already, but go ahead.
No, you didn't cut me off. It's actually a different topic, but happy to continue on this for a while. Although I'm hearing some feedback. I'm not sure.
If I don't hear any feedback, David, do you?
I was hearing it. I muted myself. I don't think it's
okay. All right, it's probably just my computer speaker. So the one thing I wanted to just mention was, I don't know if you guys saw, but it's been announced today that Franklin Templeton developed or is proposing ETFs that would turn dividends into Bitcoin. And I would love to know what you guys think of that, what that even means to you.
I saw the news, Josh. I didn't go deep diving into it yet because I was in a bunch of meetings But David, if you've read it, I'd love your. It sounds familiar.
It sounds like staking.
Right.
I mean, that's what it sounds like to me without saying staking. That's what it sounds like to me. Look, I'm a proponent of it. I staked Ether way back when, and I was happy to get rewards in Ether. If there are people who want rewards in the underlying crypto, in this case Bitcoin, instead of getting distributions, yeah, I'm all for it.
Yep, my understanding of how, at a very high level, which is probably wrong, okay, but just based on what I've read, is that there'll be a couple of alternatives, and that essentially like 95% or something of the investments would be made in large cap US stocks, and then 5% would be in Bitcoin. And then to the extent that you have dividends that are received, those would get invested in Bitcoin. However, for those listening at home, please, this could be totally wrong.
If anyone's watching, please let us know if we're wrong. I haven't read it, Josh. I promise I'll deep dive into it. And as an aside, if you're watching, thank you so much for tuning in. If you've got comments or questions for David or Josh, please put them in the chat. David, Josh, can I hijack the conversation for one thing about SpaceX again?
Of course, of course.
And you're both going to kill me for this or not, but I want to talk about financial engineering because, David, you and I don't get the chance to talk about that enough.
And what does that mean, guys? What does financial engineering mean?
So how you structure things like offerings or potential structure of the capital within your organization to optimize the raise, to optimize use of funds. And I'm probably screwing up that definition. I don't remember my corporate finance 101. But basically, what are the mechanics behind some of the things they're doing in this raise? And as I looked into the details of it, I was blown away. David, Josh, and again, some people have accused me of being a Musk fanboy. I'm not. He does some really, really wacky things. But David, I think the SpaceX IPO was like 4-dimensional chess. And please hear me out and someone tell me if I'm wrong. Not crypto related. I'm sorry we're digressing, audience. We love you all. Please forgive me. SpaceX issued its stock, and it issued the largest at market cap IPO in history. Like more than double the Saudi Aramco, David, right? Their float, which was the shares available to the public for sale, was something like 4.5% of the total shareholder, the total equity in the company. I think the average for an IPO for a public company is like somewhere almost like 15%, between 10 and 15%. So minimized float, minimized amount of shares in the market. Then, of course, everyone's complaining because Musk is by far and away the largest shareholder, so everyone's complaining about that. But here's the really fascinating thing for me. If you don't have a lot of float, you can't easily short something in the market because you have to borrow it to short it. Mm-hmm. And here's where the four-dimensional chess comes in. They're pushing for a rule change to get SpaceX added to the index in a quicker amount of time than ordinary. I think it takes at least 12 months. Josh, you probably know better than I do. And the logic behind that is when all of the lockup periods for shareholders end, they're going to sell the stock to make the money. But if it's in the index, the institutions will have to buy it to rebalance. I'm going to stop talking now because that blew me away. David, Josh, am I overthinking this?
I mean, I think it's very clever, but I think also you're not including one other point, that some of the people who bought it online have hold periods that they have to hold the shares for. Some of the online platforms made retail holders hold the shares for a certain amount of time. Look, as long as it's all disclosed, Ron, it's sort of, yes, the lobbying of the indices is an issue, but if it's disclosed to people clearly when the unlock cycle is, then to me it's sort of like, you want to own the shares, these are risks. I just think there's a number of things where he's really clever, and I'll add one other thing, is that with a low float, SpaceX is also able to use their stock currency to do acquisitions.
Right.
So, and they can also use it in an environment where the shares are trading higher than where they came out as. So it's like a double whammy for them. They, the share price has gone up, and they can use that as fuel to buy acquisitions at this higher share price.
Yeah, and the reason I bring it up, like the reason I took this 40,000 foot view, Josh, was that there's a cottage industry of people in markets that live to short any company that Musk is involved with. And I felt like this entire SpaceX IPO was also a kick in the shins of the short sellers. And David, I might be, again, overreading it, but it was really, really clever. Josh, go ahead.
So I'm just wondering, guys, as always, questions for you. So very exciting about the price, very exciting about the moves, certainly having the first trillionaire in the world that we know of. But do you think that with all the capital flowing into SpaceX, that could have something to do with some of the Bitcoin price that we're seeing?
I mean, I think it's the rotation conversation, right, Josh? Like, where's capital going to go? We'll go to SpaceX. We'll go to the AI stocks that are going to the moon. It definitely, in my mind, affects capital flows to things like Bitcoin.
And look, I think it not only was it Bitcoin and crypto, but I think other space stocks and other tech stocks saw money rotate out of it as well. Look, I want to say this. Like, I do understand there may be some very clever financial engineering going on, but the bottom line is that I do want to celebrate that. We have a space company founded in the U.S., employing thousands of U.S. employees, successful. I don't want to lose sight of that part of the process too. And we have to give them credit that a large percentage of retail investors were able to buy it. Now, some people have a view that, maybe the shares are being dumped on retail, but I like the idea that they get to participate. And again, it's people's choice. Nobody's forcing you, like in retail, to buy these shares. You're doing it because you want to. So I think it's nice that at least retail has had more of an allocation this time around.
Yeah, and David, just to that point, real quickly, you see the news. And we've talked about K-shaped economies. We've talked about we are aware of the challenges that many people have, including rising prices for food and fuel, for example. But politics aside, we should be celebrating success like that. David, I think the number was 4,400 employees of SpaceX became millionaires.
Wow, that's
because of this IPO, and these were not all white collar bankers. A welder became worth $1 million, and I remember the interview I read in the Journal where he said they offered me stock. I didn't even know what stock was, and they gave him shares. So I think that's something to be celebrated.
Yeah, I agree, and I think all these pot shots about multi-billionaire taxes and if we had. I just saw a couple of quotes that really struck me, because some people are saying, well, if we could tax this, at 5% of, $1 trillion, we could pay for all the school taxes in certain states. And like, I thought it was a profound lack of understanding of economics. Obviously, first of all, these shares are locked. Second of all, if you started selling some massive amount of shares, like the price would crater or go down significantly. So it was disappointing to hear all these, like, I want to think of a nice way to call it, to hear all these and see these tweets that really weren't very thoughtful and were just trying to score points with people.
It's not social media, it's outrage media. David, the one that really jumped out to me is ridiculous posts on like X, where if we took all of Elon Musk's worth and we gave it to the American people, every American would get like, $150,000, clearly showing me the failure of the education system because no one could do math. Everyone would get like $140 or something. It's just like this ridiculous. Yeah, I'll stop there.
The last thing I'll say is, like, it's unfortunate because, like, the entrepreneurship that's available to the U.S. isn't really available most anywhere else.
Yeah.
And so instead of becoming, like, there's a certain subsection of our country who, instead of like celebrating builders, like the haters. And I always found that disappointing because, look, ultimately, there's a greater good being served here. And, we're doing it here in the U.S. So, I'm editorializing. That's my take.
So, question, guys. And I'm very, very happy for all the reasons that you guys said about having, a U.S. successful space company, lots of things, including, honestly, the ability to go back and forth between tokens and traditional stock. And I'm wondering, though, like with the sheer size of this IPO, like, do we risk being too concentrated? Do we risk having a company tech being too big to fail? Like, what does this mean? I'm just throwing things out there, by the way, like spaghetti at the wall. So if this doesn't resonate, these are just things that are crossing my mind.
I mean, it's almost a philosophical conversation in a way, Josh, and I get where you're going with that. But to me, SpaceX is a wager on the long-term progress of humanity. And I'm not taking a pitch book from Musk or anything like that, which is a different thing than what if one of the major, what if JP Morgan, by way of example, fails? That would affect a far wider swath of people than if SpaceX failed. And I'm not wishing that on either of them. I get the point, but I think we're on the cusp of something different, Josh. I think we're on the cusp of, look, the United States is a $30 trillion economy, 28 trillion, David, you probably saw the numbers more recently than I did. Trillion is going to be the new floor for humanity going forward. Like, there should be 20 trillionaires out there with, $400 trillion worth of market cap that are sending people to planets and that are curing the climate and all of that stuff. So I get where you're going with that, Josh, but I don't know that space or the mission there is the type of company that'll need a bailout from the government.
Yeah. And I was just looking while we were talking, Josh. So you have the top 5 companies in value are NVIDIA, Alphabet, Apple, Microsoft, Amazon, and I think with SpaceX going down, somewhere in the second of the top 5, maybe TSMC and then SpaceX. So look, I mean, tech is driving the bus, as far as valuations go, but tech is what's, leading us into the future. So, I mean, look, when we do have a sell-off, when we do have a correction, it will be particularly painful in the NASDAQ. People will feel it, but it will be a correction off, really large gains of the past few years. So,
and look at the internet, and look at the internet parallel. Like everyone's joked about, it's the 90s, and but and there was a sell-off there, and what was left built the world economy that we know.
Yeah, and these companies are earning way more money, and positive cash flows and have real earnings versus the companies in the internet boom. I mean, look, Amazon lost money for many years, and they turned a corner at some point. So this is ahead of the game. We already have companies that are earning a lot of money. It's just, are their valuations ahead of like where their PEs are?
And David, I remember the equity analysts bashing Jeff Bezos back in the day because Amazon didn't have a net profit for like 15 years in a row.
Yeah, it looks like he's had the last laugh on that one.
Yeah. And for everyone out there, I've said it to all my friends, go start a company. There has never been a better time to start a company in the world, especially in the United States.
Yeah, and Josh is probably counseling some of those companies now.
I mean, the infinity pool behind her, I'm sure some of those companies are doing very, very well.
So guys, not to change the topic, but just one thing that I saw, which you guys probably saw too, just relating to quantum. Right now, not quantum attacks, but you may have seen just in the past couple of days that Peter DeSantis, who's an Amazon AI executive, told CNBC that a prediction that we'll start to see the first commercially useful small-scale quantum computers in 5 to 7 years. So that's different from the date of a potential quantum attack, but this is really like quantum commercialization. I mean, quantum seems to be becoming more and more competitive, a more and more competitive field. And I think we're seeing this not only from the tech sphere, but also from folks in banking and all across the board. So I think, I don't know, what do you think is next in this area?
I think what's happening next is that Josh will sign up and give a presentation at our WSBA AI and Quantum Working Group, chaired by Adele Hogan and Chrissy Hill. Josh, I think I'm really fascinated by quantum. I know you've presented on it, and we have a working group involved in that simply to have these conversations. And I'm pretty sure David's the first beta user of a commercially available quantum computer. I just think about the long-term innovation impact. Like, I've been reading up on medicine and healthcare in a quantum world. Can you imagine the progress that'll be made in some of these spaces? And I get Q-Day and I get the quantum hacks, but I think the future is really looking good and interesting and exciting for a lot of people.
Yeah, I mean,
I'm not sure if that's what you were looking for, Josh. So I'll let David.
I mean, I'm just, yeah. I mean, I think I agree with you about excitement. I agree with all these moves. It's the convergence of AI, quantum, crypto, you name it, energy.
David, go ahead. I cut you off, buddy.
Sorry.
No, I just, there's so many great use cases. Just think about like how fast clinical trials can be done. Having the computers in the background running all the simulations and formulations and, look, I just do think that our cyber is going to have to keep up. Because right now, getting SMS text to confirm your identity is not going to fly in a quantum world. And the one thing I do want to reiterate, and we've talked about this, is that, while we do have to worry about, the encryption on blockchains being, attacked by quantum or by people using quantum computers, all of like the TradFi cyber that we use right now is so much more at risk. If this escalates fast and we're not prepared to change the SMS text messages, even the authenticators probably are, exposed to a quantum world.
Josh, one question for me. Can you imagine the trading activity coming out of David's automated trading bot, leveraging a quantum computer? Can you just imagine the volume that will take place?
I can't. All I can say is photonics, you better get here.
Yeah.
Well, look, who knows? Maybe in a few years, SpaceX will be, having data centers in space and sending power from space to.
It does solve a lot of problems. I know everyone says it's too futuristic, pie in the sky, but data centers in space solves a lot of problems.
I just haven't figured out the delivery mechanism, how that's going to work.
Obviously, Falcon Heavy. Just the SpaceX rockets are all you're going to need.
Yeah, but look, we're in really fascinating times, and we didn't even talk about clarity today. And I do think next time we should revisit that as we hit the end of June and start seeing what the likelihood is.
Well, I mean, have you guys seen something happen this week that would cause your prediction to change?
Oh, David and I were at a meeting that might cause some predictions to change. David?
Do tell.
At our crypto assets working group, we had a fairly robust conversation about this. And basically our view is that, when this doesn't get done before the August recess and everybody's starting to campaign, for the midterm elections, the consensus was there's a very small chance of getting it approved. So I think we're really like sitting in this 6 to 8 week window now, and then July 4th is coming. So I think the window is closing some. Doesn't mean it won't happen, but I it's something that we should be really mindful of.
Yeah, to his point, Josh, the longer it takes, the likelihood drops off pretty precipitously. And David, I'm interested if you or Josh saw similar. I had a conversation, shout out to Renato Mariotti, who is a partner at member firm Paul Hastings. He commented publicly, and I think he was on CoinDesk in an interview that I saw, Illinois just passed this really egregious kind of crypto tax. Just when you work through the mechanics of it, it's just so punitive a tax that it's meant to destroy Illinois citizens' access to crypto services. And it's the politics of it, Josh, which is meant to appeal to far left progressives who hate crypto, and that's going to be a platform for the governor of Illinois to run on in 2028 for president. So I know I'm going, for those overseas, politics is infused in everything, but that was very, very disappointing to see.
Yeah, tucked into a bill at the 11th hour.
Yeah.
I think the fear is that a lot of these cities and states that have huge budget deficits and overspending, are going to look for gimmicks to find ways to raise income. And, Illinois is the first to do that. And we just have to be mindful of other states that may consider it. And by the way, it's not that a well-reasoned tax might be something that could be considered, but it shouldn't just be on crypto. It should be across the board. It's either you're doing this for all sort of transactions or not, but it shouldn't pick on crypto as it's like, guinea pig for trying to find ways to fix budget gaps from overspending.
And Josh, I'm going to do a selfish plug. Renato has agreed to do a very, very soon to be publicized webinar on the impact of Illinois. He lives in Illinois. He knows the state there well and the impact of this for the crypto industry. So we'll get word out to the public soon.
That sounds fantastic. I'll just say in practice, like having nothing to do, well, I guess it could have something to do with Illinois, but just in terms of other states, without being able to share anything specific, I think we've definitely begun seeing certain states take positions quietly right now. They haven't yet filed charges or something like that differ significantly from what the SEC at a federal level has been saying. With respect to broker-dealers, with respect to other sorts of classifications of activities and whether or not they're securities. So I would just say, though, that even though you might not see things in the news, this is something where, for many companies, there really is activity going on and communications with states where states are taking a more aggressive and, frankly, quite Gary Gensler era approach.
Yeah. Who's back in the news, but I think we spoke about it last week.
Sorry.
I won't beat that dead horse, but yes. David, Josh, we are just about at time. A great conversation. There's still so much to cover. Soon we'll be doing wine reviews. I mean, we're sort of all over the map on really important topics. David, Josh, what do you have coming up this weekend and for next week?
Well, I am going to be headed to a fun establishment this afternoon to see USA Soccer. Hopefully replicate their first win and advance in the group stage. I'm not really a big soccer fan, but you all know how patriotic I am and how I want to see us do well. So I'm looking forward to that. And then I'm also curious to see, are there any kind of copycat, regulations in the wind in other states about trying to tax crypto transactions? So that's something I'm going to look into this weekend.
Josh, did David say fun establishment? I'm assuming we're talking about a really nice sports bar, or
yeah.
Okay, sorry. Just to clarify.
Yes, like a place with outdoor TVs and good food and like a good atmosphere to have a few hundred people watch.
Josh and I are still going to text you crypto issues like at the bar, and we'll expect a response. Josh, I'm going to be keeping it a little low key. My sister's making dinner for my wife and I tomorrow, which is going to be interesting.
Nice.
Okay, we don't get to see her enough, and we've got the Hedera webinar next Tuesday. It's out there publicly. Our friends at Member from Hedera are doing a webinar on this conjunction of public and private blockchains, really talking about some of the conversations we had earlier for institutions, which will be fun. And then I promise I'm going to stop looking at the terminal eventually, but I'm still looking at it right now. So what about you, Josh?
So for me, I will be flying to London on Sunday, and I will be there for a number of days next week. Then I'll be coming back. Then I'll be back in London the following week. But yeah, I will be keeping an eye, or a side, not a side eye, but in my peripheral vision, the World Cup. What's going on with that? Although I haven't actually watched any games, I am sort of like in my mind cheering on certain teams. What I would also say though is I just want to recognize that today is a U.S. federal holiday for those watching remotely, which is everyone, I guess. And it was signed into law in 2021 for those in other countries. It is the Juneteenth National Independence Day Act was signed into law and created this federal holiday. It commemorates June 19th, 1865, the day Major General Gordon Granger arrived in Galveston, Texas, and announced that the more than 250,000 enslaved Black people in the state were free. So this is really important for many reasons, including that this news came a full 2.5 years after the Emancipation Proclamation on January 1st, 1863. So traditionally, this day has been known as Freedom Day, Jubilee Day, Black Independence Day, etc. And it's the oldest known celebration commemorating the end of slavery in the United States. So I wanted to just mention that. And
yeah.
Important history behind that a lot of people forget, Josh. Really well put.
Ron, I have one more thing to add on that note.
Yeah.
Happy Father's Day to all the fathers out there.
yeah.
Hey.
I am very blessed to be spending Father's Day with my father and my daughter, who's flying down here for the weekend. So very blessed to have that. And I wish all the fathers out there a happy Father's Day. And I hope they have a great Sunday doing however they celebrate with their families.
And happy Father's Day to you, David.
Thank you.
Happy Father's Day, buddy. Everyone, thank you so much for tuning in. If you've got additional questions for things we possibly didn't cover today between David and Josh and I, info@wsba.co. Drop us a note and we'll cover it next time. Have a great weekend, everyone. Take care. Bye-bye.
Bye.
Thank you. Bye.